Good morning. Welcome back to Squawk. India's Farm Ministry wants the government to revoke a ban on cotton exports just a day after the ruling was announced. The ministry says the ban is highly objectionable as there are adequate domestic supplies. A government panel will review the decision on Friday. Cotton futures, meanwhile, retreated on the news. Let's take a look down just about 0.8% to 90.96. And according to one of our guests earlier, you shouldn't be betting on any upside anytime soon for cotton. Here's why.
The market is adequately supplied, and the demand side, even if it's increased, it's going to increase. It's actually coming from a very, very low base. So sufficient supplies. Look at Australia export, likely to pick up. It's not the place I want to be at the moment.
Well, does our next guest agree? Ogun Coase is a partner and strategy practice of commodity trading and agribusiness, big title there at Accenture, joining us here at the SGX. So, Ogun, what's your view on cotton? Where to from here?
Well, I mean, cotton market is an interesting market, but I totally agree with your with our colleague earlier talked to you. I don't think actually this ban is sustainable. The problem with that is actually, if you look at the textile mills in India, they're actually cash-strapped, they're undercapitalized. How are they going to buy and absorb all that cotton if there is actually an export ban? So this is going to be a problem. From a pricing perspective, I don't think actually the prices are going to rise too much. I don't expect a significant drop because in cotton markets it always takes time to balance supply and demand again. We're going to see a slight volatility in the near future, but I mean, in the long run, I don't think actually it's going to change the big picture big time. Okay, what about other soft commodities? What's your outlook for 2012, sugars, grains? So the big news is palm oil, oilseeds, and I do have some great news on that side, especially for the regional players. It is a very good thing to be a producer, upstream player in this market, especially if you do have plantations in Indonesia and Malaysia maybe as well. If you look at the supply-demand balance right now, demand is outstripping supply. The soybean crops in South America, they didn't do well very recently. That is a problem, which is a substitute. And in the next 2-3 months or so, we do expect actually the prices can go up approximately 10%. On the palm oil side especially. Okay. So a very recent study that Accenture did actually suggested that actually palm oil plantation returns can exceed 20% in the medium term, which is obviously big news.
But for the palm oil, thanks Lise, but for the palm oil refiners, what are their crush margins looking like? Because if the input cost is going up, is the end product prices keeping pace with that? Great point actually. So the downstream picture is obviously a little bit different, and that is why some of the regional downstream players are trying to expand and then seeking and looking for plantation investments actually desperately in Malaysia and Indonesia right now. The margins on the refining side is not going to be that great. So the name of the game on the refining side or on the downstream side is trading. The volatility is quite high. Actually, the palm oil volatility has been quite high in the past 5 years. The way to make money is not refining or distribution. The way to make money actually in the palm oil for a downstream player is trading and actually selling structured products.
Okay, yeah, Shree's been talking all morning about the slowdown in Brazil and Latin America in general, a little bit of concern emerging there. And some people are worried about China as well, since they cut their GDP forecast to 7.5%. How will that play out if we get a big slowdown in these areas? How will that affect soft commodities?
Well, from a soft commodities perspective, actually, the demand for food, edible soft commodities, let's say, is not going to change significantly. So whether the China's GDP growth is 8.5% or 7.5%, we're not going to see a significant shift. What really impacts and what the big really Chinese story is actually the price ban, the price cap on actually on the distribution side. Again, that is limiting the downstream players' ability to keep the margins high. And that is a problem. Again, to be able to resolve that issue is to become a serious player in the trading markets and benefit from the volatility.
All right. Well, thank you so much for joining us today. Good to have you on the show.
Thank you very much.
That was Ogun Coase, a partner with Accenture, joining us there. Well, let's get over now to our partner in Hong Kong.